Hi, welcome to the week that was, where we break down all the big events from the week and tell you how it impacts your money. As usual, starting off with the markets. The steady fall in the market has been arrested. However, we're still not out of the woods. Foreign investors who have been pulling money out of India to reallocate to China continue to do so, however, at a slower pace. The stock markets are not giving any signals on the way forward, and this isn't surprising considering the fact that there aren't any fundamental or technical or sentimental indicators that it could lean on. As quarterly earnings roll in, many companies have underperformed, impacting certain sectors of the market. We'll do a deep dive on this in the top events section. The broader indices, that is the Nifty 50 and Sensex, have corrected around 3% in the month of October. However, the yearly gains still stands over 15%, which is quite. This week, all eyes was on India's largest IPO, the Hyundai IPO. This is the first time that a South Korean giant was listing its Indian subsidiary. Despite a strong brand and solid financial, this IPO was unable to attract the attention of retail investors. India's second largest automaker's IPO was underwhelming due to the fact that there was very little potential for short-term gains or listing gains. Let's see how this IPO lists next week. Meanwhile, the US stock markets have hit all-time high again, this time primarily driven by consumer and financial stocks. The tech stocks, which have been the darling of the Wall Street investors, have taken a backseat as companies across the globe reassess and reevaluate the impact of AI and Gen AI. Moving on to the big events from the week, I've got two of them for you. First, CPI index. If you have been ordering groceries from one of the online platforms, you might have not noticed this. These online platforms are notorious in giving you this impression that you're always getting a deal or a discount, and that is not true. Prices of onion, potato, garlic have skyrocketed and have increased by over 36%. The fruit prices have gone up by 8%. Food inflation remains high at 9.2% compared to 6.6% last year. This has pushed up the consumer price index or CPI inflation to a 9-month high in the month of September. The CPI inflation stood at 5.5% in September compared to 3.6% in the month of August. CPI is an index that tracks price changes of a basket of goods and services, which includes food and beverage, transportation, housing and medical costs. On a positive note, we are expecting a strong Kharif crop yield, the harvest of which should happen later this month. This should ease up the prices of pulses and grain. But we still need to keep an eye on the Middle Eastern crisis. Any escalation there would have a significant impact on oil prices, which in turn will inflate the transportation and food prices. Despite the spike, the inflation is well within the RBI guidelines of 2 to 6%. Last week we spoke about how RBI had left the repo rate unchanged. Given the current circumstances and this spike, I don't expect RBI to change the interest rate over the next 3 to 6 months. If you would like to learn about repo rate and the impact of that on your money, do check out our video from last week. As an investor, you should always have a financial plan, a blueprint of your future life goals and money goals. When projecting for this, it is advisable that you factor in a bigger inflation number so that the amount you accumulate for goals such as retirement and education doesn't fall short. Our second story is all about earnings. This quarter's earnings season is going to be very critical. It is going to set the tone for the markets going forward. It is a fundamental event that could potentially reveal any gaps between market expectations and reality. We believe the two are diverging. So far, several companies across sectors have announced their results, and this includes the biggies such as TCS, Infosys, Axis Bank, Reliance, Bajaj Auto and Havels. While all of them have reported growth, many have fallen short of market expectations, leading to stock corrections. TCS and Reliance have fallen by 2.5%, Infosys by 4%, Havels by 6% and Bajaj Auto by a whopping 12%. The only outlier is Axis Bank, which has gained about 5%. These results confirm the hypothesis that consumer spending and consumption have taken a significant hit. Cars and bike inventories are piling up at dealers, and the inflationary pressures are not helping. Most consumers have scaled back spending on clothing, electronics and vehicles. The festive season, which starts from Dasara to Diwali, is a period of high consumer spending and consumption. However, this season the spark is missing. Bajaj Auto, which is India's third largest two-wheeler, have reported a modest growth of 1 to 2% in sales this festive season so far, as against market expectations of 5 to 6%. Even the e-commerce sites have seen very timid growth this festive sale season. Brokerages predict that most companies would announce flat or low single-digit growth profit. This would come as a dampener for the market sentiment. We will keep you posted on how this will all play out. With that, we come to the end of this show. Do like, subscribe and share. See you next week.